Wall Street futures traded in mixed territory on Thursday as investors turned their attention to a fresh round of U.S. inflation data that could determine the near-term direction of the Federal Reserve's monetary policy. The cautious mood reflects the market's sensitivity to economic signals, particularly with inflation still lingering above the Fed's long-term target and uncertainty about how long policymakers will keep interest rates elevated. The Dow Jones Industrial Average futures edged slightly higher, supported by strength in industrial and energy shares, while S&P 500 futures hovered near the flatline. Meanwhile, Nasdaq 100 futures slipped as tech-heavy stocks came under pressure ahead of potentially market-moving economic releases. This divergence underscores how sectoral performance is increasingly being shaped by interest rate expectations, with technology shares, traditionally more sensitive to borrowing costs, remaining volatile. Inflation in focus. At the center of investor attention is the upcoming release of the Personal Consumption Expenditures (PCE) price index, the Fed's preferred inflation gauge. Economists expect the data to show inflation cooling modestly but still running above the central bank's 2% target. Core PCE, which excludes volatile food and energy prices, is projected to ease on an annual basis, though month-to-month figures may highlight sticky price pressures in services and housing. For investors, the stakes are high. A softer-than-expected inflation print could bolster hopes that the Fed is nearing the end of its tightening cycle, paving the way for discussions about eventual rate cuts in 2025. Conversely, stronger inflation data could renew fears of higher-for-longer rates, weighing on equity valuations and risk sentiment. Federal Reserve messaging. Market participants are also parsing recent comments from Federal Reserve officials. Several policymakers have struck a cautious tone, emphasizing the need for patience before declaring victory over inflation. Fed Chair Jerome Powell recently reiterated that while progress has been made, the fight is not over. Futures markets currently imply that rates will remain steady at upcoming policy meetings, but traders have scaled back expectations for aggressive rate cuts, reflecting uncertainty about inflation's trajectory. Earnings and sector impact. Beyond macroeconomic data, corporate earnings have also influenced sentiment. Tech giants have delivered mixed results, with some companies surprising on revenue growth while others issued cautious guidance amid global demand concerns. Defensive sectors such as healthcare and utilities have attracted renewed investor interest, while cyclical sectors like consumer discretionary remain vulnerable to inflationary pressures that could crimp household spending. Energy stocks, on the other hand, are seeing support from higher crude oil prices, driven by tightening global supply and ongoing geopolitical tensions in the Middle East. With commodity prices feeding into inflation readings, the energy sector's strength is both a market driver and a source of concern for policymakers. Global backdrop. U.S. markets are not moving in isolation. European shares traded lower on Thursday as investors there also awaited key inflation readings, while Asian markets closed mixed amid concerns about China's uneven economic recovery. The global picture underscores the interconnectedness of financial markets and the risks of policy divergence, with the European Central Bank signaling caution and the Bank of Japan facing pressure to shift its ultra-loose stance. Investor strategy. In this environment, many investors are choosing to stay defensive, favoring quality stocks with strong balance sheets and stable dividends. Others are rotating into sectors expected to benefit from structural trends such as artificial intelligence, green energy, and infrastructure investment. The bond market remains a critical piece of the puzzle, with Treasury yields stabilizing after recent volatility. As the inflation data release approaches, traders are bracing for sharp moves across equities, bonds, and currencies. The outcome could dictate not only the direction of U.S. markets but also global risk appetite heading into the final quarter of the year. For now, caution appears to be the dominant theme, with Wall Street futures reflecting both hope and hesitation in equal measure.